This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
When the Fed speaks, the market listens. So you'll want to hear what the head of the Philadelphia Fed told Nightly Business Report about the economy, interest rates, and what he wants done at next week's meeting.
Apple's battle plan. CEO Tim Cook focuses on mobile and shows off the company's newest products during its first event in more than 6 months.
And pain at the pump. Gas prices are surging in the Midwest to record levels in some places. What's behind the drive higher that has motorists fuming? We have all that and more tonight on Nightly Business Report for Monday, June 10th.
Good evening, everyone, and welcome. Techies, app developers, investors, everyone was anticipating big news out of Apple's annual Worldwide Developers Conference in San Francisco today. And Apple did deliver, announcing a number of new products and updates to its mobile operating system. But did it deliver the hit that analysts say Apple needs to turn around the company's stock? John Fort was inside today's big Apple event in San Francisco. John, tell us more about the big news today and the reaction inside the room.
Tyler, yeah, this announcement or these announcements were the kind that tend not to get people that excited at first, but they're really important for Apple building the foundation for what's next. And the most important of those announcements was the new version of the software that runs the iPhone and the iPad. iOS 7 looks vastly different from anything that we've seen before, and the developers inside were very enthusiastic about it, gave it a standing ovation. In fact, the new interface has really cleaner lines, simpler icons, and multiple panes to give a sense of depth, not to the icons themselves, but to the way you touch and interact with the operating system. There was some new hardware. The most of the news was about software and services. Apple announced new MacBook Airs and also a new Mac Pro. And marketing chief Phil Schiller had some words for people who say that Apple can't innovate anymore.
Can't innovate anymore, my ass.
Pretty direct, I would say. Apple also announced a new version of iWork that works on the cloud. You can do your spreadsheets and your documents in a web browser. Also, a version of Maps that works on the Mac desktop. You can send directions from your computer to your phone with just a click. And finally, iTunes Radio. This was one that a lot of people were waiting for. It is streaming music much like Pandora, and if you pay an upgrade fee to have iTunes Match, you can get that all without ads. So Apple hoping that this lays the foundation for people to really want the next version of the iPhone and the iPad, which we expect to see in September or October when this stuff, the software, will all be available, guys.
So, John, you said that the developers gave it a standing ovation, the iOS operating system, but was the conference overall considered a disappointment by investors?
Investors didn't seem that jazzed about this. I would say they tend not to be that jazzed unless Apple is coming out with new hardware that really wows or that has a fresh new design. That doesn't mean that this isn't important. Apple gave some head nods, some hints, maybe toward a new TV coming later, maybe toward things like that they didn't outright state, but those of us who are watching carefully could see.
Everybody's waiting for that new TV, John. But meanwhile, tell us a little bit more about this new iOS design. How does it stack up against the Android, for example?
Very different, as a matter of fact, Susie. I mean, when you look at this, there's a translucence that they have going throughout it where you can swipe a pane up and see through it a bit. It might seem like eye candy at first, but it actually helps you remember what you were doing while you do something else. Also, they use the motion sensors inside the phone to give you a sense of depth. The front icons and the picture in the background move at different rates, so they really feel like they're on different planes. It's quite interesting.
Long question, I hope a short answer, John. Is iTunes Radio an admission that Steve Jobs, who famously said people want to own their music, that he was wrong, and that Apple now recognizes that accessing streaming music via Android and other devices is a threat to iTunes and, more broadly, to the Apple ecosystem?
Yes, Tyler, but Apple would also say even Steve Jobs could change his mind.
All right, John Fort. That was a quick answer. Thank you, man. John Fort reporting from the Apple Developers Conference out in San Francisco.
And more changes today at another tech giant. AT&T is extending the length of customer contracts for wireless subscribers before they're able to earn a fully subsidized new phone. The contract time goes from 20 months to 24 months, something top rival Verizon has already done. AT&T is also adding a walkie-talkie-like push-to-talk feature for all of its iPhone customers.
And Google made some news today, too. The search giant has reportedly won a bidding war with Facebook, paying $1.3 billion for Waze, an Israeli navigation app that helps users find alternate ways to drive around traffic jams, construction sites, and other road hazards.
And it looks like chipmaker Intel is branching out. The company is reportedly in talks with media giants to lock up content deals for a new TV service that it expects to release by the end of this year. It's designed to replace your cable box. Now, CBS, News Corp, and Viacom are said to have already reached agreements with Intel on certain details over the distribution of their programs. And innovation isn't happening just in Silicon Valley. We'll bring you the story of a blue chip company that's over 100 years old that's now bringing new cutting-edge products to market.
And after days of wild triple-digit swings, stocks took a bit of a breather today. They traded mostly around the flat line, drifting lower as the day unfolded. There were no major earnings reports or economic news to speak of. Investors spent another day digesting Friday's jobs report, mulling the next Fed moves and shrugging off a boost to the United States credit rating by Standard & Poor's. That company raised the nation's outlook to stable from negative. It says the economy and the dollar are stronger. And at the close, the Dow was 9 points lower, 9.5 or thereabouts. The Nasdaq was up by 4 to 34.73, and Nasdaq was down a fraction at 1642.
Well, the economy is getting stronger and the job market is doing much better than people thought, so much so that it's time for the Federal Reserve to cut back on stimulating the economy. So says Charles Plosser. He's one of the most outspoken critics of the Fed's massive stimulus program. He's also the president of the Federal Reserve Bank of Philadelphia and a powerful voice on the central bank's policy committee meeting that meets next week. When I asked Plosser today when the Fed should start the exit process, he said, the sooner, the better.
If it was just up to me, I would begin scaling back, toning down the dial, the volume a little bit at this next meeting. I think the economy can stand that, and I think it's justified based on the improvements in the economy since last September.
Why are you confident that the U.S. economy can withstand this policy change as soon as the June meeting?
I don't see that a small reduction in the pace of purchase will have that much effect on the economy at all. Financial markets will react. There'll be some volatility, presumably, and they'll react. But the person on Main Street and the person looking for a job or the company trying to hire a person for a job will largely be unaffected by this, I think.
Why not wait until the economy gets a lot stronger?
Well, we could always do that, but then the risk is that you get behind the curve and interest rates begin to rise very fast. All the reserves and that we've created in the banking system begin to flow out of the economy. That would be a good sign, except that's could risk very much higher inflation down the road.
So what are your thoughts on today's news that Standard & Poor's has raised its outlook on U.S. debt from negative to stable? What is that telling you?
I think that's a positive sign, but fundamentally we haven't solved our fiscal problem. We are still on an unsustainable fiscal path. Congress has done nothing to really address that at this point. It still needs to be addressed. So while it's favorable, I don't really believe we've solved our fiscal crisis.
What do you think are the chances that your colleagues on the Fed will vote at next week's policy meeting in favor of starting the process of cutting back on stimulus? Yes.
Well, you can read their speeches as well as I can, and many of them have talked about it. Judging how we calibrate the degree to which we turn up the dial or turn down the dial is something we don't have a lot of experience with or much theory to judge on. So we're doing this through judgment and through discussions with each other and our colleagues, talking about how do we think about that, and it's a tricky problem.
So if it doesn't happen at the June meeting, could it happen by, let's say, September?
Sure. the longer the economy continues to improve, the more comfortable will the committee feel that it can dial this back without having adverse consequences if that's what they're afraid of.
Looking at the markets, we've seen how the mere discussion of removing stimulus, what it's done to the markets. What do you think the reaction will really be once the Fed does something?
It depends on which market it is. Different markets will react differently. There are many people out there who would welcome some further rises in the increases in the interest rates and the long-term rates if we got out of this.
Are you worried that there could be a big stock sell-off once the Fed really starts this process?
No, I'm not.
Why not?
If the market is doing well, because households are doing better, because the housing market's doing better, because firms' profits are still strong, and they have lots of cash, their balance sheets are strong, then there's no particular reason why the market should sell off. And if it does sell off, I think you have to ask the question, well, gee, was all that really real, or was it just ephemeral?
I'd like to ask you a little bit about the housing market, because I'm wondering that how these higher rates could impact the still fragile housing recovery.
I think the reality is that we have to withstand those things. We're having housing prices rising, depending on which index you look at, 8 to 10% a year over year right now. We don't want to get so far into a boom in the housing market that we create the problem that we had 5 or 6 years ago.
Are you worried about a bubble brewing in the housing market?
Well, no, not yet. But the housing market is strong right now. It's very strong right now. So why not take the opportunity when a market is strong to pull back somewhat from your support of that market so that it can begin to stand on its own feet and not rely on monetary policy to kind of keep it alive, because I don't think that's not what's happening right now, I don't think.
Let's say that the housing market does stumble. Would you be in favor of pumping in more stimulus?
Probably not. I'm not worried about small rises in mortgage rates that might be attributed to this to break that process down. I think it's underway.
Mm-hmm. We've seen that the rate on the 30-year mortgage is now over 4%.
Right.
Where do you think that rate will be by, let's say, the end of the year?
Oh, I don't predict those kind of things. What we do know is that even at over 4%, slightly over 4%, historically, that's a very low mortgage rate. Very low by any stretch of the imagination.
And Federal Reserve policymakers start their two-day meeting next Tuesday, June 18th, and Chairman Ben Bernanke will hold a news conference on Wednesday to answer questions on Fed strategy.
President Obama has nominated Jason Furman, the current deputy director of the National Economic Council, to be the chairman of the President's Council of Economic Advisors. President Obama described Furman, a White House veteran, as a trusted advisor.
When the stakes are highest, there's no one I'd rather turn to for straightforward, unvarnished advice that helps me to do my job. He understands all sides of an argument, not just one side of it. He's worked tirelessly on just about every major economic challenge of the past 4.5 years.
If confirmed by the Senate, he'll replace Alan Krueger, who's returning to Princeton University to teach.
The nation's capital was also buzzing about the government contractor, Edward Snowden, who divulged the inner workings of some top-secret U.S. surveillance programs, including the monitoring of Verizon cell phone records. Shares of Booz Allen Hamilton, the intelligence-gathering company he worked for, fell 2.5% today. Now, Booz Allen profits more than $1 billion a year from the federal government in the big business of outsourcing thousands of intelligence jobs to the private sector. Amon Jeffers has been following the story all day and joins us from Washington. Amon, what's going on?
Well, the fact that Booz Allen was the employer of Edward Snowden, the 29-year-old technical analyst who says he's the man who leaked the NSA documents to the London Guardian and to the Washington Post, that fact has put renewed attention now on this whole question of private intelligence contractors, the so-called Beltway bandits in local jargon here inside the Beltway. You know, the Washington Post did an epic series on these firms a couple of years ago, and they looked at exactly how pervasive this is. Let me bring in now a couple of bullet points. If we could put those up on the screen, you get a sense of just what it is the Washington Post said about the scale of this. They said that some 1,271 government organizations and 1,931 private companies work on programs related to counterterrorism, homeland security, and intelligence in about 10,000 locations across the United States. They also said in the Washington, D.C. area, 33 building complexes for top secret intelligence work are under construction or have been built since September of 2001. 2001, occupying the equivalent of almost 3 Pentagons or 22 U.S. Capitol buildings, about 17 million square feet of space. They also said that analysts who make sense of documents and conversations obtained by foreign and domestic spying share their judgment by publishing 50,000 intelligence reports each year, a volume so large that many are routinely ignored. So guys, that's the scale and scope of the private industry that we're seeing here. More companies now involved in private spying than intelligence agencies and government entities themselves. And a lot of the reason is the explosion that we saw in the post-September 11th era in intelligence contracting here in Washington.
Why has the government outsourced so much of this intelligence gathering and analysis?
Well, Tyler, I think one of the main reasons is that post-September 11th boom. They needed to hire a lot of intelligence analysts, and they needed to hire them very quickly. And what they found was they couldn't pay competitive salaries in the government on the government scale. Remember, a CIA agent makes government scale salary, whereas what we saw here with Edward Snowden is he says his salary at 29 years of age was $200,000 a year. So they're able to pay these folks a lot better in the private sector than they are in the government, and that's one reason to do it, is to lure top talent.
Who oversees all of this?
Well, it's overseen by a secret court, the FISA court, an intelligence court that handles this, and of course the intelligence committees up here on Capitol Hill. Now, their secret committees, their workings are secret as well, so a lot of the criticism has focused on the fact that they're overseen by secret courts and secret committees, and not a lot of this is out in public view, Tyler.
Amon Jeffers reporting. Thank you very much, Amon.
You bet.
And still ahead on the program, what's behind the surge in gas prices that's leaving Midwest motorists suffering from sticker shock. But first, let's get a check on how the international markets closed today.
Summer driving season is almost here, with millions of Americans hitting the road for vacation. The good news, average gasoline prices are lower than they were at this time last year. The bad news, there are places, especially in the Midwest, where pump prices are actually higher and rising fast. With a look at how high and where gas prices may be headed next, here's Hampton Pearson.
In the Midwest, $4 a gallon gas prices as the summer driving season moves into high gear is sparking near four-letter frustration for motorists.
That $4 threshold makes you feel like you're being strangled.
What's going on? What's happening?
There goes all my vacation money.
According to AAA, the nationwide average for a gallon of regular gas is $3.63, but in 4 Midwestern states, it's more than $4 a gallon. Michigan is the highest in the U.S. at $4.22 a gallon, up 12 cents in the last week. Analysts say scheduled maintenance at 2 large Midwest refineries is taking longer than expected. And with fewer refineries nationwide, other parts of the country could experience similar price spikes.
You've got larger refineries, and when larger refineries go offline, they take out of the equation of supply and demand a much larger volume than in the past.
As for the rest of the country, this summer's driving season should not be as bad as last year. The national average for regular gas at the pump, AAA says, should hold in the mid-$3 a gallon range. For Nightly Business Report, I'm Hampton Pearson in Washington.
And prices are expected to start dropping in the Midwest by this coming weekend as those refineries get back online.
If you own a Honda Odyssey minivan, listen up. Federal safety regulators have added 320,000 of those older model minivans to a growing probe into faulty front airbags that have already impacted more than 2 million cars from 3 different automakers. There's no recall yet, but officials say the airbags on 2003 and 2004 models can inflate without a crash. The airbag control computers on the Odysseys are the same ones used in the 1.8 Toyota and Chrysler vans that have already been recalled.
And safety regulators are also moving closer to a recall for Pontiac G6 sedans from the model years 2005 to 2008. The concern traces to several issues, including faulty brake lights, cruise control problems, and complaints about not being able to shift out of park. And that is an obstacle to locomotion.
FedEx is raising rates starting on July 1st. The delivery giant will increase freight shipping rates by about 4.5%. Back in January, FedEx increased shipping rates for ground and home delivery, but says the new increases only applies to freight deliveries.
Well, the numbers for Lulu were anything but lemons today, and that is where we begin our market focus tonight. Lululemon, the maker of stylish yoga and workout gear, beat estimates for sales and profits when it reported after the bell today. This despite the much publicized recall in March of yoga pants that were too sheer. The debacle certainly did not help CEO Christine Day, who announced she's stepping down once the company identifies a successor. Lululemon briefly touched a new all-time high today, closing at $82.28 before dropping sharply on that CEO news after the bell. Stifel Nicholas upgraded Facebook to buy from hold, saying the market isn't giving the company enough credit for new products and mobile video. Facebook shares up almost 4.5% today to a closing price of $24.33. And the Dow component United Healthcare was a gainer on an analyst note, boosting the target price to $79, suggesting that more of UNH's profits will come from pharmacy benefit management rather than from its health plan businesses. Shares of United Healthcare up almost 2%, finishing at $63.68.
Dow Component Travelers is buying the Dominion of Canada General Insurance Company for more than $1 billion in cash. Travelers will merge its Canadian subsidiary with the Dominion and remain based in Toronto. Travelers shares ended the day down a fraction to $83.30. Here's another sign of the recovering housing sector. The largest mortgage insurer for Fannie Mae and Freddie Mac, MGIC, said delinquent loans fell more than 3.5% from April to May. At the same time, it wrote more new insurance as home buying increased. Shares of MGIC were among the leading gainers in the S&P today, up more than 4% and more than 28% since early April.
But homebuilder stocks got hit today. That's after a J.P. Morgan downgrade of Lennar, one of the nation's biggest home builders, from overweight to neutral, making shares fall more than 3%, becoming one of the biggest losers in the S&P 500 along the way. Some other big home builders followed suit, including Pulte Group, KB, Toll Brothers, and D.R. Horton. And coming up, we'll take you inside the lab of a blue chip company that's innovating like mad, and it's not headquartered in Silicon Valley. First, a look at how commodities, treasuries, and currencies did today.
Embattled hedge fund SAC Capital saw a ton of outside investors pull their money out of the firm in the wake of federal insider trading charges against some of its top executives. A standard quarterly period for capital return notices, it's known as redemptions, showed that nearly $3 billion in investor money was taken out of SAC, which was in line with expectations as the Justice Department investigates the fund and its founder, Steve Cohen.
Well, no one seems to be pulling out of McDonald's these days. The world's biggest hamburger chain reported same-store sales rose about 2.5% in May, helped by its low-price dollar menu and its late-night breakfast offerings, including a new and healthier egg white sandwich. Shares of Dow component Mickey D's up more than 1% today.
Another member of the Dow is 3M, which you may know for its Post-it notes, packing tape, and other household and workplace items. But 3M does a lot more than that, spending billions on research and development on new products as it innovates to keep a step ahead of competitors. Michelle Caruso-Cabrera has more on 3M's plans and its chief executive.
Magic wands that instantly design new crowns for your teeth. Thin slit fiber that keeps you warm even in this huge freezer. Liquid that looks and acts like water, but doesn't hurt electronics, evaporates instantly and puts out fires. 3M, which used to be called Minnesota Mining and Manufacturing, is a center of innovation, even though it's 110 years old and a long way from Silicon Valley. For the company, the struggle is always the same, making sure new inventions in a lab turn into new products on a shelf. To ensure that happens, 3M uses an internal metric called the New Product Vitality Index.
Is something that we measure in terms of products that are sold today that have been introduced the last 5 years.
CEO Inge Thulin took the helm of 3M last year. His goal? That 40% of the company's revenue should come from products that didn't exist 5 years ago.
We are today at 34. So we're still a way to go, but if you think about it, we are a $30 billion company, and today 34% of what we are selling didn't exist 5 years ago. So that's a tremendous accomplishment for the company.
To achieve the higher target, Tulane plans to increase spending on research and development, getting to 6% of revenues, up from roughly 5% for the last decade. But by having so many consumer products, 3M is susceptible to fluctuations and slowdowns in the economy. One reason the company fell short of profit expectations last quarter.
This is a company which in particular has a pretty significant exposure to Asia, particularly technology, optical things, things that go into touch screens. That's soft right now.
The weakness in Europe didn't help either. But being that affected by downturns in the global economy also means that once the economy makes a turn for the better, 3M sales should improve right along with it. For Nightly Business Report, I'm Michelle Caruso Cabrera.
Turning back to your interview with Charles Plosser, I thought it was very interesting that he said that he did not think removing the stimulus would affect the stock market very much.
No, and he said because if the fundamentals are there, then there's no reason to be really worried about it. We'll see. It could happen, maybe not right away, but in the next couple of months, and we'll see how investors.
It is ultimately going to happen. We don't know how the picture ends, but we know how the ending begins.
We're going to have to leave it there. That's Nightly Business Report for tonight. Thanks so much for watching.
And I'm Tyler Matheson. Have a great night, everybody. We'll see you back here tomorrow evening.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. At its annual developers conference, Apple unveiled some new Mac laptops, upgrades to its iPhone and iPad operating system, and a new internet radio service. But investors were not impressed and shares ended lower. Standard & Poor's upgraded the credit rating of the United States from negative to stable, citing a stronger U.S. dollar and growing economy. But despite that, stocks were flat today. The Dow fell 9 points, the Nasdaq up 4, and the S&P down a fraction. And sales at McDonald's were higher than forecast in May thanks to its dollar menu and late-night sales of breakfast foods. The CEO of Lululemon is stepping down 3 months after an embarrassing and costly recall of see-through yoga pants. Be sure to tune in to Nightly Business Report right here on your public television station.